This is just an excerpt from a full episode. If you enjoyed what you hear here, go check out other full episodes, either on YouTube or as part of the podcast feed. Enjoy! Okay, let's begin with not learning from history news. The Morrison government, and guys, it's rare we want to give them credit for much, but for this, they deserve it. The Morrison government wants to roll back standards legislated a decade ago, which were intended to stop consumers signing up to unaffordable loans and unsuitable credit products. A decade ago. Why does that sound roughly familiar? A decade ago. After this year, it feels like everything was 1,000 years ago. But that was when we were just starting to recover from a little thing you might remember called the notorious GFC.
Brooklyn, baby.
Yeah, that's right. The global financial crisis. The recession so nice, we thought we'd do it twice. I would say it's been a few years since we've had an event that unites all of us, but hey, we're still in the midst of a global pandemic. Though, granted, the global pandemic hasn't brought us together, it has in fact made us socially distant. Unless you're shopping at Bunnings, then your normal shopping habits have not changed.
Don't need a medical certificate if you refer to the DH. No, I'm allowed to do this, and you're discriminating.
All this is, according to the Morrison government, is an effort to increase the flow of credit to help kickstart economic activity. The government wants to pare back responsible lending obligations that require Australian credit providers to make inquiries about the customer's financial situation to ensure products are suitable. After all, the Liberal Party is the party of personal responsibility. Unless of course it comes to punishing one of their own. For more on this, see my episode about Stuart Roberts or Alan Tudge. Put simply, it requires lenders to check how much a potential borrower is earning and how much they're spending, and whether there's enough left over to make their repayments without substantial hardship. Or put even simpler, doing the bare minimum for their job. The idea is something of a slightly different situation to the initial circumstances that brought about the notorious GFC. It's like a reimagining of the notorious GFC.
Brooklyn, baby.
The Charlie and the Chocolate Factory to the GFC's Willy Wonka and the Chocolate Factory. The government announced plans to defer due diligence responsibilities from lenders to borrowers, allowing credit providers to rely on the information provided by borrowers unless there are reasonable grounds to suspect the information they are providing is unreliable. I mean, to be fair. And the banks do not deserve a devil's advocate. The banks have proven that they are unreliable at self-monitoring, even when there are massive fines and punishments on the line. So maybe, just maybe, the responsibility should be shifted. I mean, if we have learned anything from this pandemic, it is that people are willing and capable of accepting personal responsibility for their own good and for that of the greater good.
After 4 weeks of stage 4 lockdown, patience is wearing thin.
Banks have complained about the responsible lending obligations regime being too onerous and complicated. But here's the thing. They are trained to do this. This is literally their job. They have not much else to do. But the rest of us, we have other jobs. Jobs that already don't pay us enough to do our own job, let alone having to do the bank's job on top of that. And besides, if it's too complicated for the bank, how are we expected to do it? The Morrison government says the current consumer protection framework has created an atmosphere of excessive risk aversion among lenders, which has restricted the flow of credit. Meanwhile, the government has created an atmosphere of ruthless prosecution, which has restricted the flow of people being able to afford to feed themselves and their families at the same time. But hey, one man's villain is another man's saviour. while winding back regulation for some loans and credit products, mostly from the largest and most trustworthy banks. The government plans to strengthen controls on higher risk credit, like payday loans and consumer leases. A move that I actually agree with, but am mildly suspicious of, as it is being brought in by the Liberal Party. A party of magicians who specialise in saying, look over here with one hand, and preparing the knife that will end you with the other. Now, this was tried 2 years ago, this attempting reforms that were, at the time, stalled after the backbench rose up under the questionable leadership of Queensland Nationals MP and perpetual bad take machine George Christensen, who claimed he was against it because he turned to small credit lending in his 20s to pay for household goods and unexpected bills when he was hocked to the eyeballs in debt, and was wondering, where will people in desperate need then go to access finance? Because presumably he knows that the welfare safety net system may be strong enough to catch you when you are falling. I mean, enough that you don't die, but it will not stop you from breaking an arm or a leg or landing on grandma on the way down. But stop complaining, you whinger. A perpetually broken and rebroken set of limbs not quite set properly is much better than being dead. Also, I'm told by the Liberals continuously, again and again, and they would know, because they have been resurrected from death and now live as undead minions to their dark masters. Or at least, I assume as much, otherwise, why would they act the way they do? This is a strange position for the coalition to take, as it was the coalition who proposed the reforms to begin with. But I guess they have been impulsively blocking all reforms that might help poor people for so long that they're just blocking it on instinct and not even thinking about who made the suggestion in the first place. It is abundantly clear that the coalition has been pushing the jobs angle for a long time, and their ruthless slashing of JobKeeper is all part of their brand new job bullying program. Obviously, they are keen to see us all reskill, especially those of us in the arts, with a 130% cost rise to the humanities degrees. But hey, guys, not all of us want jobs in banks, alright? If I'm forced to do this, I will be adjusting my resume accordingly, putting down my experience as being in banking. I already list myself as a former Centrelink employee, as I had to do their fucking job when Robodebt was around, and being a former Centrelink employee is pretty believable at the moment, because they're just so keen to boot them out the door. These reforms are intended to ensure that more small businesses make it through the current recession rather than go into administration as a consequence of the downturn. After all, they can't have businesses dying on their watch. Just let them lend themselves into a new debt based on economic downturn, and then Labour can be responsible for the downfall of society. It's simple, really. Simple trickle-down economics where you bake a problem into a system and slowly, over time, the problem just trickles down to the next party, whoever's in power when the problem bursts. Obviously, you want to be out of power when the problem is set to finish trickling. Kind of like pass the parcel, if the parcel was a bomb. Financial Counselling Australia's Fiona Guthrie seemed to crack a little, expressing through gritted teeth in a voice that can only charitably be called Cassandraing, wherein, like the famous Cassandra of the myth, one tells in clear and open terms what the consequences of these actions will be, while everyone around them ignores them. Poor old Cassandra. Despite her plethora of successful previous predictions, nobody listens. So Fiona Cassandra'd, as we learnt to our cost during the GFC, weaker lending standards mean people will be loaded up with as much debt as possible. There is significant profit to be made in pushing borrowers to the edge. Now, for those unsure, Financial Counselling Australia is an organisation that helps thousands of Australians every year to pick up the pieces of their financially shattered lives, often after being approved for loans or credit cards that they could never hope to afford. They are mostly financed by the government, unless the banks are looking for a quick heartwarming story to put in their Christmas letter, then they might send them some finance in order to provide training on domestic and family violence to financial counsellors and capability workers around Australia. Lessons that would be less likely to be needed if the banks weren't so irresponsible with their lending practices in the first place. Like this case, from the year after the notorious GFC.
Brooklyn, baby.
Where in Los Angeles, California, an unemployed man who once worked for Price Waterhouse and Sony Pictures murdered his wife, 3 sons, and his mother-in-law before then turning the gun on himself. He left a suicide note saying that he was in deep financial trouble and had considered killing only himself, but he decided it was more honourable to kill his entire family before committing suicide. Now, I don't have any jokes about that. How could I? How could anyone? We've all seen the obvious stupidity of the decision. Consumer Action Law Centre CEO Jared Brody Cassandra, none of the big banks opposed the responsible lending laws at the recent House of Representatives Economics Committee hearings. Even the banks are smart enough to know that they can't be trusted. The banks, the ones who were recently busted stealing from the dead, laundering money for terrorists, and knowingly lending to problem gamblers. And that is while there were laws in place that would punish them. It's staggering that anyone would think this is an acceptable way to recover an economy, as if it wouldn't eventually find its way back to life without putting people in peril. Especially these people who are so against making major adjustments to fix something as important as the environment. There is more than one economy, guys. There is only one environment. And on a long enough timeline, there will be a return to equilibrium for both. People will be able to start businesses again. It will be hard and it will be terrible for a bit, but it will be much harder to try and recover a doomed environment. Sure, the environment will always be there, but it won't always be sustainable for us. But as long as there is us, there will always be an economy. These guys have their priorities backwards, like low-income voters voting for Trump because they see short-term gains, even when the one making the promises has failed to deliver again and again and again.
Are you in a better place than you were 4 years ago?
Absolutely, absolutely.
Is America in a better place than they were 4 years
I
ago?
believe absolutely.
We have higher unemployment, we have 200,000 people dead due to COVID, and we have riots in the streets.
Yes, let me just tell you this much. Yes, I'm doing much better. I'm literally making 4 times as much as I was making when Obama was president.
What do you do?
I work for a debt relief company.
Here, we see Senator Rex Patrick, an increasingly crucial crossbencher, saying he is yet to be convinced that relaxing the laws will help the economy. This guy is riding to our rescue/destruction again. The Centre Alliance recently had its entirely too much power over our lives. They are the living embodiment of the Chinese symbol for crisis and opportunity, depending on how they vote that day. Independent Senator Rex Patrick is still on the fence as to whether or not he will support the changes to the National Consumer Credit Protection Act, saying, "My approach to this is one of nervous caution." Not the most reassuring statement from the man whose influence has failed us on getting rid of union-busting laws. We actually had to be saved by a One Nation and Greens alliance in this instance. Can you believe that such a thing would exist? He failed us on ensuring the cost of universities would not be increased, and his former alliance partner, Sterling Griff, is responsible for a ban on hentai in Australia. Yeah, just think about that for a second, guys. Even former Liberal leader, and man, you probably didn't know because I had to look him up and he was around in my lifetime, John Hewson, has rejected this idea. Now, look guys, as none of us know who he is, let me just contextualize John Hewson for you. In November 1991, the opposition launched a 650-page fight-back policy document, a radical collection of dry, economic liberal measures, including the introduction of a goods and service tax, however this one was 15%, various changes to Medicare, including the abolition of bulk billing for non-concession holders, the introduction of a 9-month limit on unemployment benefits, various changes to industrial relations, including the abolition of awards, a $13 billion personal income tax directed at the middle and upper class income earners, 10 billion in government spending cuts, the abolition of state payroll taxes, and the privatization of a large number of government-owned enterprises. So he didn't exactly have the best interests of the people at heart. So it is really something for Houston to slam the Morrison government proposing scrapping of responsible lending laws, claiming that it could be detrimental to the economy over a long enough term, saying, I think the basic premise is wrong. Lending might stimulate some short-term spending, but in the end, it has to be serviced. You are stroking a debt monster. Now, for those of you who don't know, Debt Monster was also one of the monsters who worked at Monsters Inc. He was reserved for when children weren't getting scared enough. He would appear to seniors and people in their early 30s who now have to face up to the realities of their HECS debt. More recently, he helped create the algorithm that would be the basis for robo-debt. Sadly, that put him out of a job, as he had been replaced by automation. Now, tale as old as time, really. Never train your replacement.